Good afternoon, everyone. I am going to recap the daily plan as well as the live market commentary I provided through StockTwits. If you don't already follow me there, it is ChocolateLabTrading. I will leave a link to my profile in the description. So let's look at what I was looking at today. The daily plan ended up highlighting what was, or what is, it's still almost 2:45 now. It's been the low of day, and I was just shy of the high of day, but the tape told us that the level was being front run and provided an entry, but we'll get into that. Alright. So, first thing I came to point out was the TPO charts. So, I said creating a daily plan, step 1, looking at the TPO. So in this picture I'm looking at the overnight session as well as yesterday's time session. I'm not sure why. You could see that my date is wrong. This should not say that, or not this, my footprint chart daily. It says the wrong date, but the rest of it's correct. Sorry. I count 4 important takeaways here. How about you? I will cover in the video later. So, important takeaways. We're trading inside of yesterday's value, obviously. We are peeking into last week's. If you look left, I've been speaking about it for the past probably week and a half now. We had a balance area, and we're peeking into it, trying to accept under it. What else? We have structure. Whoa. Structure above that needs to be cleaned, and we have a poor high of this session, so we could look for a short play coming into the open, and that is what happened. We ran the overnight high and provided a great short. That's that, along with or this knowledge, looking at the overnight TPO and our poor high, going into this morning session, we then were able to look for a short if we ran the overnight high and the footprint confirmed that a short was valid, which did, but we'll look at that. Alright, creating a daily plan, step 2. Zooming out to our daily frame, what information can we take from here? Where are buyers? Where are sellers? What do we see above and below us? Very important. You could see and find this information on your own. We'll go over in the recap. Alright, so looking above, as we've been discussing, we have lots of volume trapped above of us. See a good amount there as well, and obviously on this run up there's so much volume that is now trapped. Alright, what's below of us? We can see that there is an active bid here, a little bit over here, but although this is an active bid, it's not huge. So what we're going to want to see is pull into here. If we are bullish, we're going to want to see pull into here, and want to see buyers add a ton of volume here to confirm our bias, if that was your bias. If they don't add it, if the tape's telling you they are not adding, well, then that gives you the confidence to not take your long, even though you want one, and wait for better confirmation. Where are buyers? Well, I just pointed out where are buyers, where are sellers. We could see some sellers active over here. Again, not much. Actually, to be fair, there is a good amount right there. So yeah, takeaways that we need to be aware of. And creating a daily plan, step 3, looking at a clean candlesticks chart, knowing what we know about market structure and where market participants are positioned, where can we infer stops are located? Remember, we want to trade with the big hands. Where are they loading the boat? Where retail's max pain is, or on retail stop outs. So this is a 4-hour chart. This is the balance. If you're interested in learning footprint and TPO charts and how we find balance and how we recognize all that stuff and clues on the tape, I'm going to be opening a room. I've been mentioning it. Just shoot me an email. I'll leave my email in the description if you want to reserve a spot. So let's carry on. So we are now trading back into balance, and we are looking for price to accept into balance. If it does, well, we could be looking down here at the lower range of the balance. Here we have a whole bunch of highs, and as any trader knows, when you're taking a long or short, most of the time you're putting it below, maybe not the high, maybe it's a relative equal high or relative equal low if you're going long, but most stops are below or above swing highs and swing lows. So we know above here there's going to be stop losses, and below here, there's going to be stop losses. So liquidity that market makers are going to want to take, if the context is right, they could take that liquidity and then reverse it. So that is something that we could just look at, of course, through our footprint, but even a clean candlestick chart, you could see it. Of course, the footprint is cleaner, but regardless. Just want to say thank you to everyone. Hit 80 subscribers this morning. Most of you guys are not subscribed, so if you could, that would mean the world. Let's continue. This was my daily plan now, going into the day. Had a cautious sell zone up here, which, as I mentioned before, we got front ran. It got front ran, but it still provided a valid short. Not the sell zone itself, but it was just below it, but we had a clean footprint tape. These highs were ran, which were, of course, the overnight highs. Ran the highs, peaked above, cleaned up that poor high from the TPO, overnight TPO rather, and then gave the short. Unfortunately, I was posting like a madman on StockTwits, and I actually missed that short, but that's alright. And this was right before open. Yes, this was a 30-minute chart, and I said, see how market makers can make price look bullish. Notice the candle close. No wonder we're pulling back. Keys we could take away from the transactions of market participants. So let me pull up this screenshot, but not their StockTwits. This is pretty tiny. All right. So if we were to look at this on a 5-minute chart, for a majority of this half an hour, we were going up, and then towards the end we had a slight pullback. Regardless, if you're what I call a chart trader, someone who just looks at candlesticks and trades off patterns, price is looking bullish. You know, we're trading above the moving averages. We're respecting pullbacks. To someone who may not know better, we are trending up. Join the trend. Trend is your friend. Go long. But with the footprint, we could see that we had exhaustion at the highs, and longer term, we're still in a downtrend. We're below higher time frame moving averages. So we see into the 9 EMA on the half an hour chart, 30-minute chart. We had some exhaustion. Not only that, but we had what I highlighted here, a P-shaped distribution, and we closed under a majority of the volume. So no wonder, as I said, we started to pull back. This next candle opened, can't muster up enough volume. Look at this 400 contracts compared to, look over here, 7,000, 6,000, 3,900, almost 4,000. We're seeing the same exhaustion we saw up here, right here. And we start to, I don't want to say crater because it's only about 8 points, but you get the point. Using the footprint, we could dissect each candle and be able to play these little moves if that is your trading style. So next up, I said take a look at your daily chart. Remember what we need to see before thinking of looking for a proper reversal. So this is now, yes, 10 minutes into the open, and we started coming down. And what do we want to see for a proper reversal? Well, we're going to want to see buyers more active. Yes, we do have a buying imbalance. Yes, it is a big imbalance, a little bit less than 12 times, but we're still transacting a good amount of shares here, and this volume node needs to become bigger because, as you can see, we still have bigger ones above. So yeah, that is what we could take from that. Is there anything else I said? Yeah. Okay, so just warning, make sure the signs are there before you take it. All right, and temporary exhaustion. Do you know why it happened where it did? You should, if you are trading this. Crucial. Where's the logical place we look for sellers to get active? We'll cover this in the recap. Is this too small? This looks pretty small. Let me pull this up different. Is this, let me check. Yep. There we are. Alright, so this is a 4-hour candle. And we pulled, and look at what these arrows are pointing to. We have exhaustion, double buying balance. Why is it coming here? Well, this is the halfback of the balance zone. So we're, filling it to halfway line, and that's where we could see buyers come in, and of course we did. And now this isn't a place that I was looking along. I was looking lower, so I did not take this. I have no FOMO of not taking that, even though the tape was clean. That's all right. Now, where can we look for sellers to get active? Well, we're gonna they likely are to try and reject the upper zone of the balance to then visit the lows. They miss that. Well, then we're gonna revisit where these sellers are active here, and yeah, we'll probably bounce and say that these guys try selling, they get ran over. Then we'll come up here. They'll try, we'll come down here, buyers have to defend, and we'll ping pong until we see on the tape, on the delta, who's winning. I hope that all makes sense. Alright, I said, now zoom into your 5-minute. No wonder sellers are trying their hand at 55. If you're trading this, you should know why. You should also be able to see buyers and sellers line in the sand. We'll cover in video recap. Alright, so exactly where we thought they would try, they did. You could see, obviously, not exhaustion yet. We come into the moving average, and we do see some, at least, temporary exhaustion. Now, where are buyers line in the sand? Right here. Why is it here? Well, look at first, actually, we have buying imbalances, one right here. They're trying to move a bid up, zero print. But under this, look how thin the volume is down here. We get below here, it'll be a quick trip to, at the very least, these volume nodes that have high volume. So if you're someone who likes playing on, a 1-minute chart or something, you could play the break of this. You see all the bulls get stopped out, and then you're going to want a retest of this high volume area. Well, there's so many lines, I'm sorry. So this is their line in the sand. Terrible line. You want to break below and then pull above, and you're going to want to see these high volume areas be rejected. So pull below, come into here, you want to see this delta, you want to see sellers adding to their position, and once you do, you enter there for your trade. Again, that's for someone who likes playing maybe off of a 1-minute, collect 3-5 points, smaller risk, smaller reward, but still works out. Okay, all of those sellers were smoked. What do those thin volume nodes signify? Where does price need to hold for more of a up move or a move up? We'll cover this in video recap. So pull up the picture once more. What do these thin volume nodes represent? That is these sellers and these sellers being stopped out. Thin volume nodes, chances are this isn't actually buyers and sellers transacting contracts back and forth. This is all these guys marketing out, having their stops hit. And what was the second part? Where does this have to hold? I believe it was to see more of an up move. So we close up here. Thin volume, we're going to want to see price retrace, fill the volume gaps, and then hold this high volume area. If the bulls are able to hold it, we're going up. If not, all the stops are collected here, sellers pile on, come down here, and then when the buyers try to hold it, this is where we monitor on the delta, see who's winning. Are sellers adding too heavy down here, or buyers? And that gives us the confirmation, either take a long or stay on the sidelines if you're looking for a long off that for the continuation up. Okay. Do we see how sellers provided a temporary floor, provided a 12-point move? I will cover the logic behind this. Let me pull this picture up again. This, I feel, would definitely be much easier for you guys to see. All right. So sellers here, and there were sellers here, and they got stopped out and provided a floor. Why did they provide a floor, well, their positions are negative. So the people who do not stop out, once price is coming back to the break even, the smart ones, the lucky ones, however you would like to say it, well, they're going to stop out as close to the break even as possible. So when a short is stopping out, they're buying. They're providing a floor for the continuation of the long. You see the buying imbalance, not the cleanest exhaustion, so maybe you're on the sidelines. And next candle opens, we see a bid trying to move up and exhaustion. Just some notes that you were able to take from the footprint. Okay, all given in real time, walked you through exactly what would happen. No opinions, no bias, if-thens. If these old shorts provide a floor, then we're going up. If they can't, we're going to revisit here. Or if they can't, yeah, then we will revisit here. And then we have another if-then. If buyers can add to all this volume, then we will go up. Or if sellers we see on the delta are moving down on the tape, then we're going to continue lower. Simple. Look at the daily chart, guys, telling you guys something. What do you see? So this, let me pull out the picture. This is small too. All right. So, a few things we could take from this daily distribution. First, it's looking P-shape like that, and we have severe exhaustion. Zero print, 70 contracts bought, over 20,400 contracts sold there. So huge, huge selling imbalance. And this is what I was talking about. We had the poor high for looking at the TPO overnight. So we ran the stops, just peaked above, exhaust, took out everyone who was shorting the highs during Globex, and now we can go down. So we're not taking a short just because there is, you know, a poor high on the TPO during Globex. There's more to that. There is structure up here that we know is going to act as resistance. We have the P-shaped distribution. We have exhaustion on the tape. We need all this. We need confluence. We're not taking trades just because the TPO says something or just because the tape is saying something. We need to see it in valid locations and confluence between all of our tools for the least amount of risk. All right, lots of bulls positioning themselves here. Do you know why? You should if you were trading this, especially if you're going to make this your career. So yeah, let me pull up the picture. All right, so why are bulls adding, and holding here? Well, if they don't, we are going to come down to 39.55, which, of course, as I've said, is the upper zone of the balance area from last week. So look at the time of day. It's already 10. So if we start testing in here, based on a few principles from market theory, chances are we'll accept into this and then go down. So bulls are desperate to hold it from here, because if they don't, we'll get the sell that did eventually end up coming. You know, a lot of things that we will discuss in the room, some principles that could save you, especially if you're looking for the continuation long. You still have to be super cautious of that, but let's continue on. Important B period, as I mentioned before. Where do bears desperately want the B period of prints? We'll cover in recap. So, bears rather want to, in this session, to print into here. We want to transact volume if you're bearish in here so that you could get the continuation lower. And opposite for the bulls, of course. We do not want to print in here. Okay, see that? The footprint gave you the signs well in advance. So, as I said, we got the exhaustion before, and that was, at least as of now, I'm not looking at live charts, but was the high of day. Okay, and then we came back onto the top of this balance area. Pulling up the picture. Let's read what I said. I said, it should be no surprise a buying imbalance came in here. Bulls are begging bears for relief. They do not want acceptance lower. That's exactly what we see. This buying imbalance, of course, is not there. They built out this volume node. They're trying. They did a good job building it out, but if we're going to reverse, they have to build it out more. So keep an eye on it. But yeah, exactly what I said on StockTwits. Bulls are really on the cliff's edge. Moving on, bulls need to try harder than that. We'll explain more in video recap. So this, let me pull up the full picture. So if you could just look at all the volume that is now trapped now that we're trading below, we're filling the volume here, and we have some thick volume nodes here. This is where bulls are trying. You see some exhaustion, but you have to compare it. You have to look at context. Oh, I didn't realize I didn't zoom in. My mistake. You have to look at the context of how many contracts are being bought here compared to how many were sold here. And of course, we have a lot more that were sold here, so they're going to have to add big time if they're going to hold us. And they didn't, of course. Alright, bulls tried as you could see, but not nearly enough. Hands off now, traders. Why did I say hands off? Well, we're accepted into this value area, or not value area, balance area. So, knowing that, we're going to, at the very least, test the midline, but chances are we'll test the bottom, which we did. As clean as you would like for short entry. Yep, went over that already. The zero print, exhaustion, and why it was a valid short of the break of overnight high, sorry. So I missed that short, as I said, because I was posting on here, but thankfully someone got it. Where was I? Where? Sorry about this. Alright, so we were here, and new area of where buyers and sellers will duke it out. And yeah, so still a 30-minute chart. We know that there's previous buyers here. Buyers are trying. Sellers and volume is here with the zero print. And we're going to bounce between these until someone gives up. And that's when we monitor the tape, the volume nodes, the delta, all of our fun tools to be able to take advantage of it. So something to touch on here, if you are a shorter term trader, like to trade off smaller time frames of 1 minute, you could be playing this, or if you caught the short, this is how you monitor your position. If you see that sellers aren't doing their job up here and they're being overrun, look at this volume gap we have here. Chances are, if they can't hold that, we're going to fill it. So you can cut your trade there, take your profit, or maybe you took profit already and you're at break even. You're going to monitor once we come back into here, and then monitor whether we're accepting into this high volume node area. If we do, then you cut it. It depends. Me personally, it depends if I took partials or not already. We're already 25 points down. I always pay myself 10 points. So what I probably would have done was, if I see that we are accepting over the balance area again into this, or looking like we're going to fill this volume gap that I was talking about, I'll take half off the position and then just let the rest ride to break even. So collect some profits. And we saw sellers jumping in at the 55 area, pictured here, trying to make a trend. See the moving average on the 5? They are trying to trend down. Buyers trying here still have work to do though if they want a reversal. They see they were trying at the midline, some exhaustion, good amount of exhaustion, but these volume nodes are not nearly big enough for a reversal. And of course, we accepted into the last week's balance area, and we started going down, and warned about it well in advance. So if you're someone, for whatever reason, if you're looking for longs here, the footprint can help you because we did not build out the volume, and you could clearly see that on the footprint. Alright, so now those buyers over here, they got ran over, and we dropped, left the volume gap, and had building out volume nodes right here. Nice exhaustion, so it's lining up perfect for a long right below. Why is that perfect? Sorry, let me touch on that. Because we want to enter on the stop losses. So you want to see buyers pile in here, and when they get stopped out is where we want to enter. So let's go next. There's a few techniques you could use to catch this bounce. So we did have a temporary bounce here. This was the trade that I ended up taking. But I'm not really going to go into detail on this other than the exhaustion that you could see on the tape. Just some things that I'm going to talk about in the room and other things that I look at. Daily chart is telling me my time is better spent elsewhere. So I actually took off here and missed the long from my zone. This was another mistake. If you watch yesterday's recap, I made a mistake in my trade management. Let me pull up this picture. I'm just trying to find it. I apologize. I believe this is it. So I saw just these thick volume nodes all the way down. Whoa. So it kind of looked like sellers were moving down on the tape to me. But I was basing this off one time frame. You had to look on multiple time frames, and we got some nice exhaustion into here for the long. So that was just a silly mistake on my part. But sure enough, we came into the zone. You don't have this clean exhaustion obviously on here, but then when you go to your bigger time frames, at 4 hour, I believe the 4 hour is the one that showed the exhaustion, but also your daily chart, and we had nice and clean exhaustion. And once you're in the trade, you have clean tape, bid moving up the entire time. Sellers trying at the cloud, trying to continue the trend down, and they are ran over, provided the low of day. Now here is this annotated, and you could just see stops being ran of short sellers, bid moving up. Very, very clean tape for your trade management. And we bounced 25 or 35 points rather at this point, and you could see sellers trying again at the top of the balance area from last week. And now we're back in the afternoon session looking at a 30-minute chart, and we have thin volume underneath. So what do we know happens if we accept under here? We're going to retrace and at the very least test here, right? So buyers need to hold this for dear life, or else they're going to go down. So two trades can be taken, just like before when we looked on a smaller time frame. Same thing in a larger time frame. Below, take it, or if we build this bid, we're taking it on the way up. All monitored through the footprint. And exactly what happened. They could not hold this. We came down. And then you had traders thinking that, okay, we are now above moving averages on the larger time frames. We are good to buy moving average trades. But of course, they're not seeing what we're seeing, and perfectly into here. And that provided 12-point bounce, or did I say in here? So 20 points on the short, and then 10 points on the long. And that's everything. So daily plan worked out perfectly today. And the market commentary I felt was good. Yeah, so if you want to join the room, just email me. It's ChocolateLabTrading@gmail.com, and I'll see you guys tomorrow in the next recap.